Good day to one and all. This is Dr. Sivaraman here. I was presenting Tracking the Forex Market Together Part 1 between 9 and 9:45 GMT during the early European session. So I'll be doing the Part 2 of this webinar, Tracking the Forex Market Together, between 14 and 14:45 GMT. It is a simple market tracking technique. I just explained to you following the type of moves they make it in the market. With the help of that, we try to find out what the players intend to do. Accordingly, we decide on our trades. So during part 1, I had taken some positions and I wanted to explain how the hedging has to be handled. So let me go to that particular page. Okay. Now during part 1, I had taken a buy position in the case of Euro at 1.3422. And people are asking why you are taking it near the high. Then I explained to you, any level if you take the position, still we will be able to make profit from that of the market moves. And then I kept 45 pips above the limit and also the entry stop or the hedging order at 33.92. What happened to the position? It got hedged when they made the drop and they came down to 33.62. And then subsequently I placed stop at the entry in the hedge, and then it came down to 33.66 at that time. Then I closed the position at 33.70 and I made about 22 pips profit and kept another hedging order at 33.50. Still my buy is working at 34.22. Currently the market is 33.81.83. Now with regard to GBP, when I was talking and after 9:30 data release, even though it was mixed, still they made the drop, giving some attributes, and came down about 100 to 110 pips and formed the new low 1.5283. Then I kept the hedge order at 1.5293 that got hedged, and immediately when it was making profit for 10 minutes I kept stop at entry, and the hedge got closed when they started gaining the level, and now the new hedge order is working at 1.5270. So these are all the two positions I had taken, and I booked profit in the case of Euro in the hedge and kept another hedging order. Still the buy position is open, and in the case of GBP the buy position is open and the hedge was closed, a new hedge order is placed, and I will start moving the hedge order, maintaining 30 pips or 20 pips, 10 pips, and finally keep stop at entry once the position makes up about 25 pips profit. I will continue that trade during this particular session and also explain to you how exactly I am doing the either way trades during this particular day. Now explaining this particular aspect, I wanted to go to that of the expected market moves, what I explained on Monday 18th. Now on that particular day 18th, I explained that 20th Wednesday the market is expected to make a dip and firm up during the Japanese session, and volatile moves may be seen during the rest of the sessions, European and US session. Because it is midweek, they are expected to make this sort of moves in order to induce the traders to do sell and buy trade, and then they accumulate all the buys, and also those who have taken the long position, they see that they don't give profit. So automatically they come for long liquidation when the new lows are shown, and then subsequently they make a rise. And we have seen that 1.34 was low, and then they dropped another 100 pips. And when they make such a drop using some attribute, immediately people holding the long position think that GBP is expected to endlessly make that drop. So they create a fear of that nature, and I explained many times that GBP is the sentiment creator in the market. So once the sentiment is created, now you find that all the currencies are showing the earlier USD gaining move. Now euro has gone to that of the positive net change. It is gap time, and USD Yen has gone to that of the positive net change. GBP is holding around the same level, and USD CHF is also showing nominally USD weakening move, but the commodity pairs are showing the USD gaining move. So they are showing only mixed move, and as they are done an extended downward move and recovered towards close of the European session, from 13:30 GMT, they are expected to make a very brief false move of firming up and make a little bit of dip during start of the European session. And today, by 19 GMT, you find the FOMC minutes, 19 GMT, FOMC meeting minutes. So automatically, whenever a prime data of this nature is expected, the traders normally wait and find out what is the outcome, then they commit the positions. So in a less volume condition, the players are expected to make the swings during the European start early US session and also in the gap time. So they may not make any big moves, they may make only small swings. So in the meantime, I'll explain to you how exactly we do our trading system. Now with regard to the initial lows and the highs, I have shown it during that of the European session part 1 of the webinar, that euro formed the initial low of 1.3382 during that of the Japanese session around 3:30 GMT and low 3382. From there they made only 20 pips drop, but still if because they have been holding around 34, you find that they made a big drop, and that is how they give the impression. And so actually 20 pips only they made the drop from that of the initial low. So when you try to buy near that of the initial low, then we would not have been hedged. And then 1.3389 is the current level. It is above that of 1.3382. Still it is gap time. So around 14:30 GMT, when the US session starts, where they hold the market, we need to find out. Then the high is 1.3334, that has not been breached. They are expected to breach the high during that of the European session, US session. Now in the case of GBP, 1.5421, and that is why I kept that for the buy around 1.53 area, I kept the exit limit around 1.5419, just 3 pips below that of the initial low, because they are expected to recover and then start making further recovery afterwards. That is how they make the moves whenever they create GBP, whenever they make the drop in the case of GBP, and they don't just like that recover it straight to that of the high. They just go up to that of the initial low and try to create an uncertainty as if it is going to drop. So on the pullback, people might sell, then they try to take the market upward. And in the case of USD Yen, 93.37 was the high. They breached and formed 93.14. Still, after initially forming during start of the European session, they have not breached it, and the high was 93.82, and still they are holding around 93.72 level, and quickly they gain the level. And you know that GBP USD Yen was the currency which was making lower level consolidation initially. Now it has come closer to that of the high in order to breach the high and go above. And and tomorrow and day after tomorrow they are expected to take it further high, and USD Yen is a currency, they try to make the one-sided gains. And in the case of CHF, again 0.9197 was the initial low, and they breached it by about 12 pips and gone above that. 91.97, 92.25 is the current level, 92.50 is the high. They are not breached the high, they are expected to breach the high, and now you find that net change is 0.0, and also here net change is only 1. Excepting GBP, you find the majors are not showing much of a move, and it is more of a consolidation. Induce the traders to liquidate the long position. For that they have just dropped GBP and created the market sentiment. So all other currencies, traders will liquidate the long position, and then happily the players buy everything at the lowest level, start making a big rally on the upside afterwards. Then in the case of Canadian dollar, 1.0113 was the initial low, and they made only 3 pip downward stop and during European session. Then they started gaining it, and 1.0121 was the initial high. They have just gone above and holding very much above this, and already gained about 35 pips, and they are expected to take it for the high. And so it is comfortably trading above that of the parity. As I explained, USD CAD is expected to be in the gaining mood. Similarly, USD CHF is also expected to gain more in the coming days, along with the Euro and GBP, and also USD Yen. That is with regard to the forecast. Then Australian dollar, they have made the drop along with that of GBP just to create the sentiment, and 1.0337 was the initial low, and they came down to 1.0310, so just about 27 pips, and then subsequently they are holding around that of the low now, and the high is 1.0358, and they breached it by 10 pip during the Japanese session, and subsequently made the drop and breached the low, and they are holding it. During the US session, they are expected to slowly gain the level. As I explained, that Australian dollar is expected to make a prolonged consolidation, and the range could be 1.03 or briefly 1.0250 and things like that, and subsequently go up to that of 1.05 and make an upward stop, and that is how the move is expected to be in the case of Australian dollar. Let me minimize this. So in order to understand the players' intentions, we try to note down the initial lows and the highs, and subsequently follow the market timings. So we have seen that European session gets over by 14 GMT. Now current time is 14:12, and the gap time 14 to 14:30 GMT. Let us watch the moves, how exactly they are doing it, and from 14:30 onwards the US session is expected to commence. And the players are expected to make some volatile moves little bit, but not like European session, and then slowly they are expected to gain. And 19 GMT during the start of the late US session, the FOMC meeting minutes are expected to be released. Then obviously they will use that as a trigger and try to make the opposite move what they have done it during the European session, in order to conclude the volatile moves for the midweek, and then tomorrow and day after they are expected to make for the gaining moves in the case of Euro, GBP, USD CHF and USD Yen. Then, how exactly our basic trading strategy? We note down the initial lows and the highs, I explained it, and also find out what is the net change. Here is the net change in the market. In all the currencies majors, you find nominal net change excepting USD, GBP, and also in the case of Canadian dollar just 36 pips and Australian dollar 45 pips. Moderate moves are seen, but in the majors excepting GBP, all others are just making prolonged consolidation. GBP drop, an isolated drop, is mainly to handle the GBP cross, and also in order to create the market sentiment. Then majors are active during the early and the late sessions, and the crosses are active during the mid session. That is how they make the moves. And today you would have noticed that Euro was not at all breaching the low or the high during the early European session, and they made the swings, but the Yen crosses made a big drop and during that particular time. That is how they handle it. Then afterwards, I explained to you, we need to know about that of the timings of the market and also the type of moves they do it, and then we will be able to take the trading decisions. So they make the moves less than 30 minutes move and more than 30 minutes move. Less than 30 minutes move or stop, and they just go below that of the low and make a brief downward stop for 20 to 23 pips, and then gain back above that of the initial low and go above, and that is referred as a stop. And the false move is the one they come up to that of the low and reverse, or up to that of the high and reverse, and when they come from that of the low up to that of the high quickly, then they go below that of the go to initial low and breach it and go below and hold for 30 minutes and then start making the drop. In the event of rising from that of the high, they go up to that of the low without breaching the low, they just reverse and breach the high and stay above there for 30 minutes and start making an upward move. So before that of the extended move, they make the false move. Hope you are able to understand. And the false move are also seen most of the occasions during the gap time in order to create or in order to induce the traders to take wrong trades, and then they take the intentional move during the sessions. So they make the less than 30 minutes move as the stop hunt and the false move. Then the extended move is more than 30 minutes up to 2 hours. They make a quick drop or a quick rise and just stop cutting the new low in about 2 hours and start making the reverse and come slowly above that of the initial low and then above initial high and start making the rise as a continuous intentional move. Because during the rise, what they do, every level they try to buy. After accumulating the buy position, after hitting the stops, they just slowly gain the levels and buy all the sells. When the traders holding long position, they have taken the lower level buy, they liquidate first. Then subsequently those who have taken the sell position, they average it by taking further higher level sells. And then the players continue to rise. Automatically it becomes a trap for the short sellers. So the players alternatively trap the long holders and the short sellers in the market. So we need to understand whom they try to trap, and we have to avoid getting trapped. Nothing more than that in our trading strategy. So if they make a move more than 2 hours, more than 2 hours, then it will be for 2 sessions and start of the 3rd session. That is referred as the intentional move. And today they just only made the extended move and not the intentional move on the downside. Stop in the case of Euro and stop in the case of USDN, and only in the case of GBP extended downward move, and then they have started reversing it slowly. And in the case of Canadian CHF, only downward stop in, and in the case of Canadian dollar also brief downward stop in and upward stop in, and upward move and an extended upward move has happened. In the case of Australian dollar, they have just made the false move, come up to that of the low and reversed it. So now we are able to understand in different currencies they make different type of moves, so which we need to identify. Only when you use the live market quote page, you will be able to see all the 4 majors and 2 commodity pairs, how they are handling it, whether it is a USD gaining move or a USD weakening move or mixed move. Then based on that, whenever they make the mixed move or a contrarian move, that is some currencies showing USD gaining, some other currencies showing USD weakening, that is referred as a mixed move or the contrarian move. That is mainly to handle the crosses. Otherwise, if they are making USD gaining or the USD weakening move, and there is no point in trading in crosses. The crosses may not give good profit. But when they make the contrarian move, the crosses will make very big moves, and that you can make use of in order to maximize the profit or get very good profit in the market. And in between, whenever before the data release and things like that, they make the swing in the low volume condition. That is, without breaching the low or the high, they make small swings of 20 to 30 pips, either near that of the low or near that of the high, and induce the traders to do scalp trade. And then subsequently, towards close of the data release time, they start making active moves in the market. So if they simply hold the market, nobody will take position. They have to necessarily make swings in the market. Only then, like the gambling, then they have to be active with their own men. Only then the people will come and bet. And if nobody is there to watch in the gambling, then nobody wanted to become the first to start the gambling. So the people know very well the gambling tendency has to be induced, only then the traders commit positions. So they know very well about it. So they make the oscillation or swings in the market, and automatically, like a gambling, then people try to commit positions and later on see that they are not making profit, or they make profit, or mixed fields, etc. But ultimately my objective is that If you get rid of the market fear, only then you will be able to perceive the intentions of the players, and accordingly you can trade. Whatever be the best type of analysis we try to use, still the market can move opposite to us. So in the event, we need to focus on the trading strategy and use it in a systematic way and get rid of the market fear and handle it properly. And if you have only one position and use effectively the hedging, then we will not have any fear. If you simply try to accumulate the position without understanding how much our position, how much our equity can hold in the market, and always envisage they can suddenly make such big moves, and if you take more positions, invariably it attracts margin call or induce automatically the fear in you, and you just liquidate and start blaming others that because of you I lost money and things like that. But ultimately that is due to over trading, not because of anybody other than the person who is initiating the trading. He got convinced with some analyst and taken the position, and once the position goes against, he has got the tendency to comment on the analyst. But ultimately, if you notice that your mind will try to accept an analyst who is trying to tell you a similar view, whatever the view you initiate, and then subsequently if the analysts say that yeah, GBP has to go down further, then you feel very happy when you have taken a sell position. Or if analyst says that GBP has to go up anyway, this is only a downward move, then you are holding a higher level long position, you feel happy that okay, anyhow GBP has to go up. So that sort of you get convinced that your idea is correct. But if you fail to implement the risk limiting factor, then the market can go against you and attract margin call. Subsequently it may move in line with that of the analyst expectations, but you won't be having the position. Then it triggers your anger. So I'll understand that whatever be the type of analysis, you need to use the risk limiting factor, the hedging or the stop. Don't try to trade without that, then it may lead to complications. So I explained the type of trading strategy, and with regard to the entry and the exit, when the market is near that of the low, now still it is a gap time and subdued moves they are making it. A dip in the case of GBP, or a just holding in the case of Euro, and also in the middle level in the case of USD yen, and Canadian dollar is simply holding closer to high, and now they breached the low in the case of Australian dollar, little bit, 1 pip. So it is a false move during gap time. So in the case of Australian dollar, we can take a buy position. $1.0309 and the entry stop 30 pips below, and we can fix the limit as 1.0368 is the high. You can keep 3 pips short of that as a trade. Okay, so I have taken during the gap time a buy position around 1.0309 and kept the hedging order and kept the high as the limit for exiting or take profit level, and kept 30 pips hedging in order to limit the risk. In the event if it drops, I will review the hedge. When the hedging is not making profit, I will try to close it. For 30 minutes I will try to close it and keep another hedging order 20 pips below, and then once the market start moving upward, I will just move the hedging order upward to this level until I keep stop at entry in my buy position. I will start moving the hedging order. In a loss making position, I will be moving the hedging order, and in a profit making position, if the position makes 25 pips profit, I will keep stop at entry and start moving it upward as they rise until the market comes closer to that of the limit, and then the market can either hit my limit or the stop, so that my profit is protected. So I don't depend upon the forecast at the time. I only depend upon the trading strategy once I commit the positions, and I review the market from time to time. Once I take the position and the position does not make profit for more than two hours, I simply either hedge or close it and review the market and take another position. So this way, if you have the mindset to accept when the loss is small and not allowing the loss to maximize, and just accept when the loss is bearable, and so that you don't lose your shirt, then you will be able to really see that predominant of your tradings will be making consistent profit. And no trader can say that I have traded without any loss, and obviously the loss is part of the game, but more than 70 to 80% of the trades one should be able to make profit. And if you try to maximize the profit in each of the trade, like 100 pips, 150 pips, when the going is good, trail the stop and maximize the profit, and accept the loss when it is about 30 pips, or sometimes cutting the hedge with 5 pips loss and things like that, you will find consistently our equity will grow. And the most important thing is never over trade. Take only one position as a small trader and focus on it and try to book profit. Only then you look for another trade. Between the trades, try to give at least 30 minutes of gap or the free time, so that you are able to review the market. When you give 30 minutes of time, you are able to find that what the players are intent to do, and also follow the market timings, so that don't enter during the wrong time. You try to enter during that of the specific market timings, what I have shown you, so that you will find that the basic trading strategy works very well for you. Okay, now let me take up the question. There are so many questions asked during that of the European session, and I was not able to answer to those questions. I request those of you asked the questions, if you are available, kindly repeat the questions. I will be willing to answer to those questions. And some of the people also asked and want me to explain with regard to the GBP data release. And you know that the GBP data release was mixed. And you know the claimant, that is those who are claiming the insurance premium for the unemployment, and the number has come down, in fact, and in spite of that they made the drop, telling that the unemployment rate has come down from 7.7 to 7.8, and they used some excuse and made the drop, and they are expected to reverse it soon. Once the FOMC, I was expecting them to reverse around 13:30 GMT based on the data release, but they are just consolidated, and now they want the long holders to liquidate and then slowly gain after 19 GMT the FOMC meeting minutes. So I was expecting 13:30, the building permits or other things they wanted to use, but they have not done it, even though some of them are positive, negative, and things like that. US data was negative, they are not just taken into consideration, and they want this to be used as a trigger. Why? Because the volume has drained. When the volume has drained, so they have to look for the next data release and try to use it as a trigger. So the data release time I look into as a trigger time, and I don't give much importance to that of the actual data release, actual data, because the sentiment is short-lived in the market, and today they have dropped it, and tomorrow when they rise it, we simply forget about what happened yesterday, and we look for tomorrow's data and day after tomorrow's data and things like that. Now Nambia, gap time is a false move. Yes, they make false move predominant of the time, but whenever the volume drains before a prime data release like FOMC meeting minutes, then they don't make all the big moves. They make false move only in certain currencies, not all the currencies. If you look into this, you'll be able to understand which currency they have done it. They made a brief 1 pip stop in the case of Australian dollar, but still holding about around that of the initial low. Now it is start of the US session. 14:30, 31. So for 30 minutes you have to observe what they are trying to do it. When they gain some levels in the case of Australian dollar, and we try to keep stop at entry. About 20-25 pips, keep stop at entry, and then they can either hit our limit or the stop at entry. So we don't lose, but we only gain. If we trail that stop from that of the entry on the upside, then we try to get either a minimum profit or a maximum profit. Okay, opposite move they are expected to make. Opposite move need not be similar, it has to be opposite. So when they make a similar move, that is what his question is. Suppose they make a dip during that of the gap time and make further dip during that of the early US session. But we have to find out what they have done during start of the US session. During start of the US session, they have not made any quick upward or a downward move. In such a scenario, then they are simply holding it during gap time and also start of the US session. And during the US session, first 30 minutes, 14:30 to 15 GMT, they may make a brief stop end in some currencies, but not all, or need not. And they can simply consolidate if there are not much of a stops available, and only they want the traders to take wrong positions, and they try to make small swings. Pretend as if technically it could drop or technically it rise, and then the traders automatically or slowly commit positions. If they have not looked into that of the data release time frame or the trigger times, then they commit, and subsequently the players find out in which way the traders have committed, whether the longs are built up or shorts are built up. Based on that, they continue to make the moves in the opposite side of the sentiment created and try to earn. Then wine. Two of your students warned you. I asked you if EURUSD was going to dip because it had been rising for 2 sessions, and another chap asked, why are you buying near? Yes, I understand that. I gave that explanation pertaining to that. Because the webinar has to get closed, I wanted to commit a position and show you how the hedging trading can be done. Hope you are able to understand. So I wanted to present exactly how the hedging trading can be done. Use the hedging and try to book profit on the downside as well as the upside. And I can simply say that I wanted to take the position near the low, but still some people will commit the positions and later on hedge is filled, so I have to demonstrate how it has to be handled. That is why I have taken it, not otherwise. Then Srinivas, will EURUSD reach 1.37 in this week? Yeah, we have to see. Now currently it is trading around 1.34 area. So another 300 pips gaining is not difficult, and in case if they make any spike, then there is a possibility of reaching 1.37, and most likely either by weekend or by Monday they are expected to reach, as per my estimate. Then wine. Was there any clues that we missed? No, it is not the missing of the clue. Let me tell you, normally my trading strategy is watch from start of the session up to 30 minutes, 8:30 GMT, and try to commit a position. If they are making a downward stop, and I'll just come above that at the initial low, I'll take a buy and close it once they go up. So the webinar started only by 9 GMT. So I cannot simply say that the webinar started around 9 GMT, so I will not take any position. That does not serve the purpose. So that is why I committed. And if you become really well versed with the market, and you will be able to take any time the position and do the trades. For small traders, I suggest the basic trading strategy, and there are other advanced trading strategies, and that you can deploy and continue to make profit in the market without any market fear. I want everybody to achieve a condition wherein they don't have the market fear at all, and they are able to commit the position and successfully make money from that other market, using the hedging to limit the risk and using the trailing stop to maximize the profit. Hope you are able to understand. So I have to show some critical trades. In Srini, what happened? Leonard 1.3730. Yes, they could make a rise to 1.3730 by weekend or early Monday. Then Moses to Wine Brown. Thanks for your comments. I saw your questions concerning 2 sessions, and as the chap that asked why are we buying it, then yes, that's what I explained it. Then Srinivasan, will Euro USD, that is again answered. Starting with month, we look for sell trade. No, next week is the month end, so they are expected to make more volatile moves in the market. So we can only do swing trades. But this week, you can try to do some position trade if you want. Then when we see that the board is not making contrarian moves, does it mean that the market will follow US dollar strength? Or yes, they will be doing either US dollar weakening or the strengthening move. And when they are not making contrarian move, that means they wanted to make big moves in the case of majors. Whenever they make contrarian moves, they wanted to make big moves in the case of the crosses. So that is how you identify what type of move they are doing it, whether USD gaining or USD weakening. If it is mixed move or contrarian move, focus on the trade, focus on the cross trades. If they are making big moves in the case of majors, then focus on, when they are making USD gaining or USD weakening move, focus on the majors and trade. Ultimately, you should understand these currency pairs are only tradables. So you have to find out which one will be able to give good profit and focus on that and capture your profit. Whether you make profit out of Euro or profit out of GBP, it doesn't make a difference. It is only dollar profit. Okay, wine. So we should not trade during 1.5 hours after session start and 1.5 hours before session end. In the event, if you are trading in crosses, first 1.5 hours you just see how they are handling the majors, and later on they will start handling the crosses. At that time, do the trades in crosses. But if you want to do the trades in majors like Euro, GBP, USD Yen and USD CHF and also 2 commodity pairs, when they are near the low, during either early or the late session, try to take a buy. When they are near the high, during early or late session, take a sell. If they are not breached the high for 30 minutes of your observation during the late session or the early session, or book profit, buy and book profit during the rise. Do you trade during Japanese session? I am an opportunity trader, so I find out what sort of moves they are doing it in the market and whether they are making spread more than 30-40 pips in the market or 50 pips in the market. Then only I commit in the market. If there is a very narrow range, then I don't take position and just wait for the paint to dry. So I just look for quick moves in the market. So today during the European session, you would have noticed that during the quick drop, I just committed a position. I always watch for them to stop cutting the new low for 30 minutes, I was telling you. But the webinar got over, so I have to commit a position during the European session. Otherwise, I would have taken near that of 52.90 or so and kept the hedging order and keep stop at entry once they start gaining it. That is how I do the trade. I know very well the quick moves are false move, but it may appear very difficult to digest, but that is the only way you can do it. But we can do a sell and buy trade as a breakout trade. If you fail to book profit and they suddenly reverse, then later on you repent that you have done a sell after the drop. So I do not want any emotional trading to happen, and the earning should be a very successful process, and also we should not be under stress. See, we earn money in order to keep our life comfortable, enjoy the life, and enjoy the leisure, etc. In the process, we should not make it stressful and detach from the family and say that, no, I am very busy in trading, I cannot participate in any of the functions and things like that. That is a very wrong approach. So why you want to earn the money? For what? So we have to understand. So the money is an instrument in order to facilitate your comfort. But we should not become slave to money. So we can only earn in order to sustain our livelihood and also maintain our lifestyle. So in the process, we should not become slave to money or become addicted to trading, and then you find that we miss most of our prime life. So never do that, please. Because that is the first step I explain to anybody who approaches me for any forecast or any trading guidance, etc. Whether subscribed or free, I always tell them, trade at ease. Only then you will be able to sustain it for a very long time. Otherwise, you may lose your patience and your emotions might be triggered and your health might be spoiled, and then you find it extremely difficult to become a successful trader. What do you think of New Zealand dollar as the government gave negative speech? See, giving a speech, if the speech can change the economic conditions of the government, please understand all the government agencies can continue to speak for 24 hours alternatively. So they can ask the president to speak and the finance secretary to speak and or the bank secretary to speak, and every 30 minutes they can continue to speak. If the economy is going to grow based on the speech, fine. I will definitely recommend to every government please continue to speak, so that our economy will grow or come down, so that there is no productivity needed. Please understand, they are all nothing but the triggers. They are all arranged. So I do not want to go into the details. Please understand that they are only used as a trigger and induce our emotions. And sometimes the speeches are made out of necessity, but the players interpret it differently. See, I can interpret a speech in any way I want, you know very well. And that is how in the court of arguments, the interpretations vary. Whenever you make a statement, the opponent can just misinterpret it. So in a similar way, anybody can misinterpret a speech or just exaggerate or trigger the fear, etc. out of the speech. So don't give much importance to that. I humbly request you to consider it as a trigger time. Is there any alternative for hedging? For US platform, can we use two platform? No, if you use two platform, fine. During the second and the third week, if you trade, then they will not make any big moves. Say for example, in the case of USD yen, suppose you have got around 82 a sell position in one platform, and 83 you have taken up at 83 level, you have taken a buy in another platform. What will happen? One platform account will be closed and another platform account will be making profit. So if you are using two different platforms, it is okay, but you have to limit the risk in one platform if a particular position is not consistently making profit for 2 days. If one position in one platform is making profit, the other position in another platform is consistently not making for 2 days, you accept the loss in that and maximize the profit in another platform, and you will be able to earn more than that of what you have lost in one platform, and that profit you can share it with another platform, so that both the platform will be healthy. So you have to design that trading strategy in the event of absence of hedging. Other possibility, I explained it in my trading system. Suppose you have got a buy position in the case of euro, and then you wanted to hedge. So 30 pips below, you can keep any of the cross wherein euro is the numerator, which has made similar moves. Now euro is making 16 pips negative net change. So euro yen is making positive net change. So euro GBP is showing positive net change. And Euro CAD is making positive net change. Wherever you come across such negative net change, if you try to use it for hedging, then it will work. So you don't find any Euro cross which is making negative net change. I am not able to see that. If you are taking a long position in Euro, then you are supposed to sell in another Euro cross. Okay, now Euro CHF. Here, then Euro is almost making no net change. Then you can use it as a hedging. 30 pips below the market, you can keep a sell order. So that will limit the risk, nothing more than that. So you are not supposed to take immediately a position. Instead of buying Euro at 1.3380 and keep 1.3350 as a hedging, you take 1.3380 buy and keep hedging order 30 pips below the market in Euro CHF. When it is making a very less move, then you will be able to find out that you will be able to see that the hedging is really helping you. Ultimately, the hedge has to help you in avoid eroding the usable margin. Then Moses, there is a point that I am asking for more clarification concerning the contrarian moves. When are we not supposed to take trades in crosses as you can combined with contrarian move? See, whenever they make a negative net change in Euro, negative net change in USD yen, then both are making a downward move. When they make a downward move, then you will find that Euro yen will be making a big downward move. If 10 pips in Euro, 10 pips in USD yen, Euro yen will be showing 20 pips, around 20 pips downward move. But now you find that it is making a very narrow range swing, about 100 pips. Unless and otherwise you just take a sell here, effectively buy here, you will not be able to make a very big profit here. Whenever they are making either USD gaining, now it is USD gaining move, 14 pips positive net change in yen and 11 pips negative net change in Euro, then you hardly find any big move in the case of yen cross, Euro yen. In such a scenario, don't take any position there because you will be waiting for a long time. Once you wait for a long time with a position, your patience is tested. Then immediately you go in for a distressed trade. Why invite problem? That is what I am trying to tell you. Read the market and find out which currency will give the opportunity and take position in that currency. Now, Australian dollar, they made the dip. And below that of 1.0310, that was the initial low, and came down to 1.0309 during gap time, and they went up a little bit. I did not keep stop at entry because it was not making big move, and come down to 1.0302, and where is our hedge? 1.0279. So we'll wait for some time. Okay. Okay, give the link for the live market quote page. I've been giving it in the Asian session webinar, and also it is given in my trading system webinar. Okay. Okay, what platform you use it for trading? I do not want to recommend any trading platform, sir, at the moment, and not to promote anybody. That is not my intention. I am not an IB to anybody for that matter. Give me the link. Okay. What if the next 30 minutes they neither breach high nor low? What are we to assume? That means they are making swings in the low volume condition. In order to handle the crosses, little bit of move up and down without breaching the high and low. So there's no point in committing a position unless and otherwise you find some currency is near the low or the high and do a small swing trade. And 19 GMT only, they will try to make quick big moves, and at that time you can commit position. They will always make a false move before the data release time, and watch that. And if they are making a downward move, try to take a buy. And if they are making a firming up move, say for example in the case of GBP, they just made a firming up move even though it is in negative net change. It is already done 126 pips. Maximum it can do about 150, or nowadays they do only 150. So in that case, do a sell and buy trade? Might be very risky trade. Instead, wait for such drops and take a buy. Then you will be able to keep stop at entry, and they have to necessarily reverse the market, because they don't make a continuous move in these currencies, especially Euro and GBP. They make either way moves, especially during midweek. And the denominator currencies, they make continuous one-sided move. So they came down to 0.90 in the case of Australian dollar. They are holding it now, even though euro has gone to 1.34 area. And slowly you will find oscillate and go up in the case of euro and GBP. But USDN and USD-CHF, they will make less drop, more rise, less drop, more rise. That sort of moves. Okay, well. Okay, the live market quote page, you might think that it is difficult, but you don't take any position and calmly watch for a week or so. You will get used to the live market quote page. It is similar to that of simultaneously seeing tick chart in all 6 currencies. And it will be very stressful. Watch all tick stocks in tick charts in all the 6 currencies simultaneously. But live market quote page gives you and you need a little bit of interest in mathematics so that you remember the numbers, not sophisticated mathematics. Just remember the numbers. And if you develop the tendency to remember the numbers, suppose you are taking a bus or a train, you remember that number, isn't it? In a particular route, what are the bus and trains you come across? So similarly, remember those numbers. If you develop that habit, you will find all these levels, what you have seen it as the initial low and the high, which will be working in your mind. Immediately you will be able to recognize what move they are doing it. And it is much more simpler rather than looking into that of the chart. I am not discouraging chart watching, but I want the system to be so simple so that you will be able to take quick decisions in trading. What is your expectations of GBP? GBP is the currency which can make one-sided move in a very big way up to 250 pips. Nowadays they make only 150 pips in the lesser volume condition. But if they initiate an upward spike, and you will find that it is non-stoppable, similar to that of USD yen, and also in order to change the sentiment what they have created, suddenly they will make a very big spike. So avoid doing sell and buy trade during this. Probably sell and buy trade might give about 10 to 15 pips or 50 pips, sometimes even 90 pips profit. But if they start making an opposite move, you may lose all the money you have gained. So my humble suggestion will be, take a buy when they set the low and try to use the hedging to grab the profit rather than trying to go in for a sell and buy trade. Are you operating from Singapore? I am operating only from Chennai, sir. I am an Indian. Ahmed Gilani. What to do with such quick drops where stop or hedge or 100 pips too late executed happened to me? No, that is what I say. So when your equity is less, use tight hedging order. Don't take chances. When you are afraid of using hedging, then you keep 100 pips hedging order. But if you are not afraid and you have learnt the technique of handling the hedging effectively, you will keep even 10 pips hedging order, 20 pips hedging order. The hedging is not making profit for 30 minutes calmly. You can cut it with 1 or 2 pips loss or even stop at the entry. And you will not come across always the market reversing very fast. It may appear they are reversing it very fast, but they will come back again. Today we have seen it in the case of GBP. They pretended as if it is going to be a big rise and again they dropped it. If you wait only for 30 minutes, you will be able to understand that. And afterwards you can really book profit on the downside if you use a tight hedging order. So don't be afraid of using hedging. And even in the case of Euro Yen, try to use 50 pips hedging order because they are much more volatile. So use 50 pips hedging order in the case of crosses and 30 pips hedging order in the case of the majors. Live market code page shows that net change, but how does one know whether the change has happened last 30 minutes or last 2 hours or in last 5 minutes? So you are trying to say that the chart is important. See, just the last 5 minutes, 10 minutes, everything you can watch. But ultimately we will commit a position when the market is near the low or when it is near the high. We will not take a position when it is in the middle level. But once you become an expert, understanding fully the market conditions and handle the hedging effectively, then you can straight away take any level the position and use the hedging to limit. In case if they drop, book profit there, and when they rise, take another buy position and average it and close it, and about 2 hours you finish your trading. So it is like an expert. You have to become an expert, like a driving of a car. You have to become an expert. Then you find he's driving at ease, and he will be talking to you when you are sitting next to him, and you will not be even focusing on the road fully, but he is habituated with the particular road in navigation. So automatically his hand and body will just coordinate and he will reach the destination. It is something like that. You become an expert in trading. Then you see that you don't use any of the tools simply with the help of live market code page. But if you try to use occasionally that the chart and things like that, you find it very difficult to come back. It is something like you keep an assistant to teach you driving, and in the absence of the assistant you feel as if it is better to have that assistant next to you while driving. So you will never be developing the confidence fully. And only if you drive without an assistance, after a certain amount of skill set is being learnt, then you will find you are able to drive on your own. So the self-courage or the self-confidence, the courage is very important to become a successful trader. Any profession for that matter, one has to develop the self-confidence, and he has to commit to his job, and he has to find value in doing this job. Then definitely you will become a successful personality, any walk of life for that matter. When 1 hour candle crosses below or high of the market, as at 2:30 and 3:30 GMT, these tell to indicate at the trend of the market? No. See, we have to find out what sort of move they are doing it in the particular currency pair, whether around 3:30 they made the stop and to become the lead, become the particular spread, or they made an extended move, and find out how exactly they are doing it. That is very important in order to understand, rather than looking into the chart or the candle. So the catch is to make the trade when the market is not more low or more high in 30 minutes. You have to take position near the low, closer to low and closer to high, and then you will be able to make profit. When it is in the middle level, avoid taking positions. Rakesh Kumar, USD CAD is there any reversal? Is not. USD CAD similar to that of USD Yen, they are expected to make quick gain further and then make a drop, and always note down the initial low and the high. If you are a trader with regard to Canadian dollar, you just watch the initial low and the high set during the day. Let the spread becomes 40 to 50 pips. Then later on they will try to make a downward move or breach the high and stay above. Then you try to do a breakout trade, you will be able to book profit. Or when they come closer to low and breach the low and come above after a stop and take a buy, you will be able to close near the high. So either way stop ends they will try to do it. In the case of Canadian dollar, I explained it many times. So USD CAD is expected to go for the high. Your high and low is from the opening of the day. Yes, around 3:30 it is noted down in Asia, and close of the day. Yes, US session only up to 21:30 it is valid. Then tomorrow they set the initial low on the high for the next day around 3:30. Then Mohanan. Your high and low is from that of the opening of the day in Asia and the close. Yeah, it is from 3:30 up to 21:30 GMT for that particular day. Could you please show us again the slide of different timing? I'll show it. I'll wind up the webinar by showing it. If the initial low is breached in the extended move, subsequently it comes back above that of the initial low after 2 hours if it is an extended move, or after within 30 minutes if it is a stop and, but is still below the initial low. That means it is an extended move. After 30 minutes, if they are still initial high, can one conclude that the pair is still bearish because it is below that of the initial high? When they come up to that of the high and not breach the high, see, they make a downward stop and come up to that of the high and not breach the high, we can take a sell for a small profit. You are right. But I am not encouraging sell and buy trade, because once you develop that habit of doing sell and buy trade, you might find it very difficult to do a buy and sell trade. Consistently, if you do buy and sell trade, avoid sell and buy trade, small trades, wait for the market to do it. You will be doing patiently the trades, and that will be really helping you a lot. Can you give us the link for, okay, I just given it. Would you call the current GBP move as an extended move? They had done the extended move, stop cutting the low afterwards. Not an intentional move, because they are not continued for the third session. Third session they should have cut that low before making a rise, but they have not done it. Okay. Today is a good time to do position trade in GBP. Yes, you can take it, but see, you have to decide on position trade after taking a position and keep stop at entry, and 2 hours the position is making profit. Trail the stop to protect minimum profit and then try to do the position trade. Simply take a position when the market drops afterwards and say that I am doing position trade. That means you are allowing the loss to multiply. That is not the way to take a decision. Okay, I think time is up. The next webinar, oh God, I'm extremely sorry. So I will not be able to answer further questions because already it's 14:55 and the next webinar has to start. So, okay, I'll just wind up my webinar, and tomorrow I'll be presenting the somebody asked for the timings. Okay, this is the timings with regard to all the three. You can just take a screenshot of it or make a note of it. So I will conclude the webinar by showing the last slide. So I take this opportunity to thank FX Street for the slot allotted for presenting my webinar. They are all my ideas, gathered informations, etc. And there may be some flaw or defects in it. I request everybody to make a note of it and try to fine tune and perfect it in the future so that it could be really helpful for the traders who come in further years. So my contact detail, my website address is given, and my email ID is also given, my chat ID is also given. You can just contact me free of cost. There is absolutely, I will not try to convert any contact into a client, and please keep it in mind. I wanted to help and always ask people, if they are trading with less than $10,000 or $20,000, I will sell them not to subscribe for my forecast. I help them free. Please understand, don't mistake me. But I will help in such a way so that a small trader can still make profit by taking only mini lot. I control their emotions not to do over trading. That helps them a great lot of time. They make really big money, and they express their gratitude. I am happy with that, and ultimately a trader has to be a successful trader. That is my objective, not making money, and because I am able to make money from the market. So I want to really help the people. Thank you one and all. See you tomorrow. I will be presenting Asian session live market analysis tomorrow. Please come for that. I will explain further concepts. Thank you. Thanks, FX Trade.